Hello, Ask a CFO listeners, and welcome to this new series brought to you by the Treasury Today Group. In this Ask a CFO series, I'm shining a light on the different paths taken to become Chief Financial Officer. I'm Sophie Jackson, and I'm so excited to be with you on this adventure, learning more about the personal journeys and professional development of CFOs across the world. So today we're back with part 2 of my amazing conversation with Eric Ball. If you haven't already managed to listen to part 1, that's available, so you can join us once you've listened to that first. Let's dive right back into my chat with Eric. You mentioned kind of the background going through trends. So those skill sets that people are looking for when they're hiring CFOs, there are changes in mood and vibe, as you said. But have you seen in general, how have you seen the role evolve in recent years? Do you think there's a set of skills that you could frame together as what you think are needed to be a modern leading CFO?
Well, yeah, I think that the CFOs need all of the mix. They need the accounting, the treasury, the FP&A, the internal audit, all the elements. And before I was talking about how different elements kind of come to the fore in different periods, but there are commonalities across what is needed. I'd say, technical skills are table stakes. You need more than technical skills, but you don't get anywhere if you don't start with technical skills. So you just have to have them, and they can be tilted toward one function in finance more than another. But you first just have to be able to add value technically to whatever finance function you find yourself. I think innovation is key, and it's an increasingly important part of the whole finance function. Automation tools have come to every corner of finance, and these automation tools are really allowing people to automate a lot of the lower management tasks that include the tasks that you might have performed earlier in your career. When I was a foreign exchange manager, I spent 90% of my time simply trying to measure the currency mismatches because it wasn't always obvious from the accounting system. I had to go gather data. I had to figure out where the currency matches is. That was 90% of the job. Actually, buying a forward contract or a currency swap was trivial once I knew what the exposure was. So much of that job was data collection. Now, foreign exchange exposures, that is more automated. Accounting systems do have more relevant information on that. And so you can have fewer people thinking about foreign exchange, but they also spend less of their time in this sort of clerical function of just figuring out what the exposure is, and they can spend a higher percentage of their time figuring out what to do about it. FP&A, there have been all these great tools over the last decade that help automate the process of just figuring out, well, how is each business unit doing? What are the results at the end of the month, at the end of the quarter? How do we go about forecasting how that'll evolve over the rest of this year and the 5-year plan? Most of FP&A years ago was simply gathering the information. Now that's been better automated, better plugged into the ERP systems. And so professionals can spend more time on the value add part and less time on the clerical part. So I think that every function is getting automated in a way that is requiring fewer staff and also requiring a lower percentage of clerical staff and clerical functions within each job. And that gets to a related point of how you manage change, because your team, regardless of the level of automation, your team in treasury and elsewhere, you have a mix of clerical employees, employees who are process driven about tactical execution and getting the most efficient outcome. You have employees that are focused on strategy and capital raising. How do you ensure the right mix of debt and equity, and how do you go about raising equity or raising debt? With automation, you may have fewer clerical employees, but you're still going to have some. So the mix of your team will change, but you still have to figure out how to measure and motivate people with very different mindsets and tasks around clerical work versus value added work, around tactical execution, and around strategy. And I think that a big part of the job is really HR, where you have to be the supervisor that each employee needs. And that gets at a larger point, which is I think that leadership is contextual. There's no one style of leadership that works in every situation. You have to really understand your team, and some members of your team might need a little more supervision, a little more hand holding, a little more reassurance. Some of them have got it figured out, and you just need to get out of their way. And I think that regardless of automation, you always have to think in terms of what does each person on my team need to be the most effective that they can be.
Awesome. And you mentioned at the start there, the importance of innovation. And I have a little bit of a bugbear, I guess, because I feel like people often say things are innovative and they talk a lot about innovation, but they're not really quite clear what they're really talking about. Are we talking about new technology that's innovating functions, or are we talking about, a disruptive approach? So what do you mean when you speak about innovation as a key element for the modern CFO?
Well, I think it can mean different things, but I think even if your objectives haven't changed, innovation helps you achieve them faster and with fewer people. So I think that it common to everybody is the fact that innovation can automate clerical tasks and make it much easier to collect the data you need to make a decision. But there's some implications of that. One of which is that people move faster to a point where they are making decisions, and they may not have as much experience before they get to a point where they're not just collecting the data for somebody else to make a decision on, but they're just making the decision. So it can affect the mix of your team. But I think that innovation always means doing the how differently. How do you collect the data to make decisions differently? It can also mean that your objectives change. It can actually change what you're trying to achieve in your finance function. I mean, I think that's a little bit more, it varies from place to place, but I think that's why it makes it even more important to define what your objectives are, to make sure that you understand what your boss's objectives for your function are, but make sure your team understands what your objective are. Because I think a lot of the challenge with innovation comes when people apply it to a different area than really the boss wants. And so that's something that can happen. And so everybody uses it to do it more efficiently. And then some people can use it to actually do new things as well.
Absolutely. And I think what's also struck me in a lot of what you're speaking about is, as you mentioned, you need to have the technical skills. That's the beginning. You can't not going to get anywhere without those. But I think often what's overlooked are the kind of soft skill development. And that's a lot of the work that we've been doing. And it's a lot of the conversations that we're having. But there were two areas which I think I would draw out was number one, you speaking a lot about kind of understanding your own weaknesses. So I would say self-awareness, and then communication skills. That seems to be coming across in a lot of what you're saying. So I'm going to move us on now. So alongside understanding that skill sets and understanding our backgrounds, what other advice would you give to someone who's either just starting out or who is well established and is aspiring to get to that next level of leadership and of becoming a CFO?
Well, first, let me just agree with your statement about the skill set changes. And I'd say it's a little oversimplified, but a rough rule of thumb is that technical skills get you from junior to middle management, soft skills get you from middle management to senior management. And so I think that's just a good thing to keep in mind as you plan for one's career. But in terms of, other advice, I would advise people to think deliberately about what type of company they're at. It's often a little bit accidental where people get started, and that's fine because, I tell recent MBAs that don't view your first job as marriage, view it more like dating, because, get some relevant experience for a couple of years and then be deliberate and plan and change it. But I think it's really hard. I think a lot of MBAs and recent undergraduates feel like they have to get that perfect match right out of school, and that perfectionism becomes paralyzing. And I said, no, just take a reasonable job, do it for a couple of years, and then you'll know so much more to plan. So that's one thing I start with. But the larger point I'm making is to think about what type of company you're at. For example, I think big companies involve more specialization early on. The bigger the company, the narrower the initial role. So in a startup, you might be in finance and you do a little accounting, you do a little bit of treasury, you do a little bit of FP&A. In a big company, you might be, well, you're in accounting. Okay, you're in accounts payable. Okay, you're in big enterprise, accounts. And so the bigger the company, the narrower your job remit becomes, and you become a real expert in something fairly narrow. If you go to a smaller company, you get more of a generalist role, where you're kind of doing a little bit of this and a little bit of that. And the implication of that is that it turns out it's easier to move from more specialization to less specialization. So it's easier to move from big companies to small ones than it is to move from small companies to big ones. Not always, not everywhere, but just in general. And so, I tell graduates that if you're going to work at a big company, it's probably easiest to do it relatively early in your career. And if you go to work at a startup, that's great. But then a big company doesn't know where to slot you because you know a little bit about a lot of things, but you're not that expert in any one thing. So I think it's harder to go to a big company and move up the ladder. Most of the way people go from small companies to big companies is if they, hired in on Google when it was small and just rode that wave up by, staying at a company that changes its profile. That's just a general observation. But within finance, for a CFO, most CFOs start with excellence in one function. So figure out if you want to be a CFO, which function you're going to really nail early on. But then there's a little bit of a paradox, which is if you only ever stay in that one function, you may make yourself a really good director of internal audit or controller or head of FP&A or treasurer. But if that's all you've ever done, it's really hard to get you to the CFO role. And even I think it may even be hard to get to the head of that function. I mean, when I was interviewing to be a treasurer, the CFO valued the fact that I'd spent about a third of my time outside of treasury. So I understood other functions. I wasn't just a treasury specialist. And so I think to get to a senior level, it's helpful to switch. Even if you're a great treasury professional, it's really helpful, take that stint in accounting, take that stint in FP&A, broaden yourself out so that you see how treasury fits into the bigger picture. And I actually think that even if you want to be a treasurer, it's good to get out of treasury at some point. I had a conversation with the then CFO at Intel once, Sandy Smith, who said something that really resonated with me. He said, as a CFO, you're looking for depth in your direct reports and breadth in your successor. And there's a real tension there because you want the people who run each function to be really deep and really knowledgeable and world-class experts in that function. But when you're thinking about who's going to succeed you as CFO, you want somebody who understands more than one function. And there is no one solution to that. But I think it's important for people earlier in their career to think about how the people at the CFO and CEO level are thinking about what they need in a CFO, in a treasurer. And, I'd also offer someone needs your unique set of experience. It's matchmaking. It's like any relationship. I didn't have as much tech experience as some other people when I interviewed to be a tech company treasurer, but I had experience outside of tech that was helpful. When I was interviewing to be a CFO, I didn't have as much accounting and FP&A experience, but I found a CEO who wanted a CFO who was willing to be part of the sales team. And so whatever you do, you've done something a little bit differently than other people have. And in some domains, that will be a disadvantage. Find the domains where it's an advantage. And I think that's just a critical part of the matchmaking involved in moving up. Don't assume that the company you happen to be at is the best match for your current skill set. It's really easy for inertia to just, I like this company, I'm going to stay at this company. The odds are high that there's another company that would value your mix of skills even more than your current company does. So even if you're happy with your company, you're happy with your job, keep an eye out because somebody needs your unique set of skills, and it's just a matching problem to find them, I think.
Awesome. There's just so many amazing pearls of wisdom there. But I think that point specifically you made around the kind of the journey of startup to larger company, and people think that you go in at the beginning days. But it's very interesting to me because in most of those organizations, everybody's been replaced as they scale up. As you said, as that CEO or that leader needs a new set of skill sets as the company is going on that journey. You also mentioned early on when people are choosing which profession to go into, which title they want to take, that perfectionism can lead to paralysis. And that reminded me of kind of the journey you have when you're writing, actually. They say that perfectionism is the enemy of productivity when you're writing. And I want to just briefly touch on the fact that, you've written two books, one a very, I should say, very academic book, and one more creative, you have graphic novel elements and so on. Like, is there anything that you took away from that process that you wanted to share as well? Because I think that's an interesting part of your journey for me, certainly.
Well, thanks. I mean, because I started my career as an academic, I've always valued how academic research can inform everybody's jobs. You manage a team. There's a whole literature on what motivates people, and the punchline is it's not just how much money you pay them. And
Yes.
so, there's a lot we can learn. And it's easy to mock the academy because there's a lot of research that sort of how many angels could dance on the head of a pin that really isn't that helpful. But there's a subset of the research that's helpful. And I thought, having been in both environments, I just had a personal interest in serving as a translator. So I wrote my first book as a business book where I just took research that I thought was interesting and could help people in management jobs be better managers, and I summarized the research of a lot of different people and put it in really concise form. And that was great. I wrote it for managers, but it ended up becoming most of the people who bought it were students because it was almost like a Cliff's Notes or a Wikipedia, summary of different research, which people used more when they were taking a test than when they were, leading a team. So I was a little, I found a different audience than the one I was looking for, but I was still happy that, some people found the book useful. But I think that by distilling it and making these summaries, I made it time efficient, but it wasn't very fun to read. It was a little bit dry, kind of boring. And so I said, well, if I ever write another book, I'll try to write something that's a little bit less dry and boring. And then when COVID hit and I found myself in lockdown and I wanted a break from work, I went back to that material and I tried to write a more entertaining story in a fiction environment about entrepreneurship in a fictional environment where people would learn some of those same lessons, but in a way that I tried to make more entertaining. And that was just, I think, a hobby that came out of COVID and lockdown as a much needed diversion from both work and the lockdown. And I also wanted something productive to come out of, being cooped up in my house, that year. But I will say is that you're right about if you're a perfectionist, you'll never be a writer. And I tried to let myself off the hook. I said, I'm not trying to make a living at writing books. That it really helped take the pressure off that I was doing this for fun and not relying on the royalties for grocery money.
But I also think it hits on another point. You've stressed going from middle management up, there's an importance to develop your skill sets, your soft skill sets, I should say, sorry. But I also think, you need to be curious, you need to be aware. You mentioned, different industry sectors might affect your industry in the future. I think being curious, being engaged, and being, intellectually stimulated and creative is also really important. And sometimes particularly finance professionals get very bogged down in like very technical skill set development and less explorative. And so I like that you did that because I think it shows that you're keeping your mind enhanced and being open to creative problem solving. So that's what I like about that story.
I appreciate that. Yeah, I know, and it was fun. It's a fun diversion. I mean, I think that we have to feed our brains. And in finance, there's a repetitive element to finance. You
Yeah.
figure out how to do a process really efficiently, and then you replicate that and you try to make it 1% more efficient each year. That's important and that's vital to a finance professional. But I think it's also good to try to spend some of your time trying to think bigger picture and not just do things more efficiently, but figure out what other things maybe you could be doing.
Yeah, and I think also to be more playful. I don't know what you call it in the States, but we call it stand up in the UK, like kind of comedy on the spot. And there was a woman who worked for a large tech company in Silicon Valley, and she said that she went to classes for stand up. Improv, that's what you call it, isn't it? And she found that it really helped her with presenting and so on. So I think, being creative, thinking outside the box and being fun will help you to get to the next stage and who you want to be in every aspect. So now you're no
I
longer.
think there's really something to that, by the way, Sophie. I think that, I've noticed that a lot of, CEOs and very successful people that I've been fortunate enough to be in the room and be around, many of them have had that kind of quick wit, that ability to distill things into one, funny statement that has truth in it. And I think that improv really would help people in a boardroom.
Yeah, absolutely. Okay, then finally, so you're no longer a CFO, you're no longer a treasurer. Tell me about the work you're doing today and how you go about selecting which companies you find exciting enough to invest in.
Oh, well, thanks. Yeah, I mean, I had always had an element of interest in venture capital. I mean, I had a mentor who actually brought me into Oracle. He was the chair of the finance committee at Oracle and the first venture capitalist to invest in Oracle in 1980. And that investment had done pretty well for him. And I had given him some help on nights and weekends after I started in that job. And it was really just a side hobby almost, just to help evaluate young startups, very different from the rest of the work I did. But then I found that I inherited a corporate venture portfolio of stakes. When Oracle bought 103 companies during my tenure, many of those companies themselves had stakes in smaller startups. And so after 5 years in the job, I found that we were holding stakes in 180 different startups. And this was unintentional. We didn't intend to have a corporate venture arm. We just inherited one. And so I kept having these, brushes with venture capital. And I found it really interesting to think about how do you pick a company which might only have three founders and a dog in a garage and figure out which ones are going to succeed, which ones are worth financing. And after my stint as a startup CFO, I was looking for something, a new chapter, something energizing. And another observation that I made that a lot of the really prominent VCs in the Valley didn't have as much respect for their corporate brethren because these were guys who might be billionaires in their own right, who would look at a corporate guy and say, "Oh, you work in middle management, making investments on a salary." Rather than betting your kids' futures on the bets. And so I think that in some ways, corporate venture didn't get the same level of respect that some independent venture capitalists achieved. But at the same time, corporate venture was really the heart of the growth in the whole venture ecosystem. In 2013, fewer than 1 in 10 venture-backed deals had a corporate investor. Last year, over 70% of venture-backed deals had a corporate investor. So the whole venture ecosystem has grown on the backs of corporates. Corporates are also the ones that everybody in a startup wants to have buy their startup because that 90% of exits are being acquired. They're not going by going public. And so I really saw a chance to start a corporate-friendly independent venture firm based on that increased importance of corporate in the ecosystem. And so we have a venture firm where we invest in seed stage startups applying AI technologies, and we look for young companies that have already caught the attention of the big tech corporates or that we think we could get the attention of the big tech corporates. And so we're collaborating with corporates and investing in very young companies. We look for high upside. A lot of VCs appropriately worry about what could go wrong and all the different ways a startup can fail. Turns out a startup can fail in more ways than you can count. And so if you are completely defense oriented, you'll never make an investment. And so I think one of the keys is we say not just what could go wrong, but if everything goes right, how big could this get? Because it turns out that most venture portfolios are dominated by their single best decision. We're invested in 30 companies, and our financial returns will depend on how good our one best outcome is. And so we look for a high upside in the best case scenario. If all goes well, how big can it get? It is all about the outliers. We occasionally even go beyond reacting to all the entrepreneurs who come to us, and we get inundated. I receive between 10 and 20 pitches a day from entrepreneurs looking for financing, and I can't possibly even digest all of the entrepreneurs who come to me as a VC to look for financing. But occasionally I think, well, I don't just want to react to what opportunities I see from these entrepreneurs. I want to be proactive. So we have a couple of our companies that we didn't just invest in, but we actually helped get started, where we said, in this space, what company should exist but doesn't? And then we would help recruit the management team, then become the first investor, and file the articles of incorporation and help a company even get started. So it's a really interesting process. The one thing that I would say that surprised me is that as a finance person, I'm used to using quantitative metrics. But it turns out that when you're investing in a really young company, there are very few quantitative metrics. They don't have revenue yet. They have a story. So it is a creative pursuit. And so you have to kind of bring the analytical skills that you're used to in building, a forecast for how big this could get. But you also have to just think creatively, because if you're early enough, it's just a story. There are no measures yet. We raised our first fund in 2017 to 2019, a $25 million fund, which is fairly small for a venture firm. We raised a second $25 million fund from 2019 to 2021. And now we're raising our fund three. So we're out there recruiting investors. As a VC, you spend in the same way an entrepreneur spends most of his or her time trying to find VCs to invest. As a VC, you spend most of your time trying to find limited partner investors to invest. So I'd say the majority of my time is chasing dollars and trying to get people to entrust their capital to me so that I can turn around and entrust it to entrepreneurs I think, can generate that one big outlier. I really enjoy the breadth. Every business model is different. Every team is different. I'm also enjoying, after 30 plus years in the corporate world, not having a boss. The investors are in charge and you're accountable to your investors, but that's different than, somebody who's dictating what your schedule is on a daily basis. And I'm also taking advantage of the freedom that this allows me to take on some board roles. I'm on my third publicly traded company board, a conversational AI company called SoundHound, based in Santa Clara, that I'm very excited about, and I chair the audit committee there. I'm also on the boards of several of our portfolio companies at Impact, and I'm carving out time to serve on the board of three nonprofits, the National Association for Urban Debate Leagues, that brings inner city youth to college through debate, an advisory board at Stanford at the Institute for Research and Social Science that lets me apply some of my academic background to helping as an advisor to interdisciplinary research and social sciences at Stanford. And then my mentor that I mentioned that brought me into Oracle had passed away and left his assets in a nonprofit foundation that makes grants for medical research, particularly in prostate cancer and Alzheimer's. And I'm able to take my finance background and help manage the assets of that nonprofit foundation. So I'm allocated in several different ways right now, all of which draw on my background in finance in a way that I'm more than fully employed, but I get to choose, how I allocate my time on a daily basis. And that's fun at this later stage of my career.
Yeah, absolutely. I was just going to say, you've really managed to bring together all the threads of all the passions that you've had at different stages of your career and apply what you've learned to help them all in different ways. That's awesome.
It'll be awesome when some of these portfolio companies have big exits. So, for now it's fun, but not highly remunerative. Once we have companies succeed, then hopefully I can have it both ways. We're still early days, and we're still trying to get that next unicorn in our portfolio.
I'm sure. And I think that hunger keeps you young and keeps you focused. So I wish you the best of luck with it.
Well, thanks, Sophie. I appreciate that, and I would just tell people that the chance for career growth and doing new things never really ends. And early in my career, if you had told me that I might one day be treasurer of a big company, I would have said, that's great. That's a great career destination. And it was. And, once I actually achieved that, I only then started thinking, well, okay, do I want to do this until I retire? Do I want to do different things? And so I just encourage people to think about an entire arc, and you may be surprised at how far you go in ambitions.
Yeah, and I think that's such a great note to end on, because I think sometimes you really aspire to particularly those titles like CFO and so on. You think, once I've got there, then I've made it, and then that's it. And actually, the truth is that your career is, much like going down a ski racetrack or whatever. You go from thing to thing, you pick things up, you take them with you. And if you're lucky enough, like yourself, you can bring together all of your different passions and have time to dedicate yourself in different ways, whether that's academia, corporate world, investing, or whatever. But thank you so much. It's such a pleasure to speak with you. It really is. And I really appreciate you sharing your wisdom and your experience with us all.
Well, thanks, Sophie. It's been a lot of fun, and I look forward to other Treasury events. I really enjoy talking to people in Treasury, and I have to say I miss it. I working in Treasury was the focal anchor of my career, and I miss doing that on a daily basis. And I really enjoy talking to people who still are.
Awesome. All right, Eric, I'll be in touch, but have a great rest of your day, and I'll speak to you very soon.
You too, Sophie.
Bye.
Take care.
Thank you so much to Eric for taking part in our brand spanking new Ask a CFO series. Stay tuned and subscribe wherever you get your podcasts from, as we'll be regularly releasing further episodes with an array of different CFOs past and present located across the world. And please do join me again.